Dear friends, welcome to PMS Insights. In this video, we will look into what has worked for our portfolio in the last 1 year. While the earnings growth has not picked up as anticipated by most of the market experts, with Nifty earnings averaging around 5% for the last couple of years, businesses with established and time-tested models have been disproportionately rewarded. Companies which have demonstrated high pricing power, notable names like Asian Paints and Bata, low market penetration presenting a longer runway for growth like Trent, PI Industries and DMart, banks and NBFCs having access to low-cost debt and strong balance sheets have re-rated even as others have found it challenging to grow. Moving on to the top contributors across our portfolios, the consumption theme has predominantly helped in providing the impetus for outperformance versus the benchmark in the last 1 year, with stocks like Bata and Nestle contributing positively to the portfolio performance. Stocks from financials, industrials and materials space, specifically corporate banks like ICICI Bank, high quality NBFCs like Bajaj Finserv, Cholamandalam have also done well in the portfolio. Few other names which have contributed to the portfolio are companies like Shree Cement and Siemens. Let's have a look at a few examples on why these stocks benefited. As a brand known for sustained innovation, Nestle stands in the forefront amongst peers with leading market share for most of its products and categories. A noteworthy point is the success rate, which is defined as the proportion of new launches the company intends to continue, which stands at 70% for Nestle versus 8 to 10% for the others. We expect the growth momentum for Nestle to continue in the near to medium term. High ROE, cluster-based distribution approach, e-commerce-based sales along with associated benefits of targeted communication should bode well for the company. Let's have a look at another stock. Continued revamp in stores, sustained brand campaigns, foray into Tier 2 and Tier 3 towns, push in the premium products category are some of the factors working for Bata. EBITDA margins have expanded by 500 bps from around 11% in FY17 to 16% in FY19. Going forward, we expect these initiatives to improve footfalls and sales, which might contribute meaningfully to the bottom line as operating leverage and scale benefits start to kick in. There was a fair share of learning too, as few of our stock picks didn't play out as envisaged. While the fundamentals of these companies were relatively intact, issues at promoter level, adverse capital allocation decisions, disruption in industry dynamics, and cyclical slowdown were few themes which affected stocks like Exide, IFB Industries, Bosch, and Z. Even while these events were playing out, we made suitable incremental changes to the portfolio, and this has reflected in the gradual pickup in the portfolio performance. Rising consumer aspirations, premiumization, shift from unorganized to organized sector are few of the themes that are being captured in the portfolio, with more than 60% of the portfolio being skewed towards these and which could play out over the next 3 to 5 years. While it is a known fact that equities as an asset class have the potential to deliver the maximum gains in the long term, staying invested for the long term to benefit from these gains is also equally important. Thank you.